The rand is back below 19 rand to the US dollar, buoyed by better sentiment locally. This morning it firmed up to 18 rand 94 to the greenback at some point. Yesterday the currency traded below the 19 rand level for the first time in more than 3 weeks, in part helped by a slight reprieve in load shedding. Jimmy Moyaha is an independent analyst. He joins us now to break down the latest market news. Thank you, Jimmy, for your time. So the rand rally continues after firming to the strongest level in almost 4 weeks yesterday. Talk us through what's driving those gains.
Good afternoon, and good afternoon to the viewers. Well, the honest truth is it's nice to have electricity. And the rand is feeling that. Businesses are feeling that. Sentiment is improving. And it's amazing what the rand can do when the factors that have been driving the rand and putting the rand under so much pressure are actually being dealt with to a certain extent. Now, whether or not this will sustain remains to be seen, and that you're seeing from the market as well. So the market has picked up that there is some positive sentiment at this stage, albeit as minimal as it is, and it's still very early to tell whether or not this positive sentiment will continue. We need to see that the other factors that were driving the rand towards that 19, even 20 rand level from a South African perspective are being dealt with. Load shedding obviously being chief among them. So a very positive sentiment at this stage, but whether or not it will be short-lived or whether or not it will continue will have to entirely depend on whether or not the government is able to address the issues that they have needed to address for so long.
Fair enough. The Reserve Bank has published South Africa's current account balance for the first quarter of 2023. Help us make sense of the data.
Positive sentiments in that respect, or positive data rather. The current account balance narrowed quite significantly to about 62 billion rand there, and it's down from, well, we anticipated it would come in about 1.3% in the red, came in actually at about 1% in the red, so down from about 2.3%. So about a 1.3% improvement in that current account percentage and that current account balance from Q1 of this year to Q1 of last year. So very, very positive in that respect. And a lot of the drivers there were, our net gold exports increased there. We saw that on an overall basis, the revenue generated from exports from goods and services far outweighed what we expected to see from the import side of things. And that was also boosted by the weaker rand at this time, so resulting in higher revenues being generated across the board for the things that were exported. But we did obviously then pay for higher importing costs on certain products and that sort of thing. So overall sentiment from the current account was driven by a lot of the gold exports, the merchandising exports, or the manufactured exports going out. Service revenues was also up as well. We saw that filter through to the surplus or to the receipts side of the balance. So very good set of quarterly results there. It'll be interesting to see what happens in Q2 and Q3 as well for the rest of the year. Sure.
And in the same breath, Stats South Africa is due to publish the latest manufacturing, production and sales data. Let's take a look at the Moyaha prediction ball. Which side will the data fall, considering this week's GDP data that showed some growth in the sector?
I think it'll fall very much in line with our expectations. Our expectations at the moment are at about 2.5% to the upside. So we were down at about negative 1.1% in the last reading. We're expecting around 2.5%. I think we might fall possibly 2.4, maybe even 2.6%. So on either side of the 2.5%. I do think that the data we saw from a GDP perspective that you alluded to earlier is a strong indicator of the fact that the manufacturing sector did do well for the month of April. So month on month, though, we are expecting that that's going to be down significantly. So from about 4% to about 0.5% in the red, and that's not necessarily a good thing. But I think overall, year on year, that 2.5% figure seems like it is attainable. I didn't have the same positivity around it prior to knowing the GDP data last week. But having seen that data, I think we are on course to at least be above 2% in that respect.
According to ABSA Homeowner Sentiment Index, consumer confidence in the South African property market fell to 73% in the first quarter of 2023 from 79% in the previous quarter. Talk us through the factors driving sentiment down.
That, again, comes to the factors that we've had to contend with, factors that have influenced the rand and affected the rand as well. So looking at economic uncertainty as well as the high interest rate environment being cited as the two main factors. And obviously the economic uncertainty then filtering through to homeowners, or the sentiment from potential homeowners to say, is this the right time to buy? Is it buying at these elevated levels? Does it make sense? Is it not cheaper to rent? And coupled with the fact that interest rates being at elevated levels, things like home loans and that sort of thing are long-term commitments that have you thinking very hard before you commit to that sort of decision. So very much a function of the elevated interest rate and inflationary environment, and that's affecting sentiment where consumers are having to make difficult decisions around potentially looking at new options for properties and potentially outweighing whether or not you want to commit yourself to a 25 or a 30-year bond, or whether or not at this current stage it's easier to rent, hope the economic conditions get better, hope interest rates come down, and then look to purchase. Because remember, in the last 10 rate hiking decisions that we've heard from the central bank, all of them have been a hike. We've had almost 5%, so 475 basis points or 4.75% of interest rate hikes in less than 18 to 24 months. So that's definitely affected sentiment, and that you're going to start to see from these bigger ticket item purchases as well.
TikTok aims to more than quadruple the size of its global e-commerce business to as much as $20 billion in merchandise sales this year. What's going on?
TikTok's looking to take on Amazon in a nutshell. So effectively, TikTok has a feature that lets individuals browse through the feed that's going on TikTok and then purchase whatever's being sold. So if an influencer or someone that's made a TikTok has a product that they want to then sell, there's a TikTok shop, you just click on the link and you purchase and that sort of thing. And they're aiming to increase a lot of that revenue coming through from Southeast Asia, particularly countries like Indonesia in focus, where they're looking to see influencers sell anything from jeans to whatever it is that they're branding and advertising on that day. The concern or the interesting part about this is that they're still proceeding with their plans to have a heavy presence in the United States, despite the fact that they've been met with a lot of resistance in the United States. They've got about 150 million users in the United States, and that's sort of filtering through to them wanting to maintain and stay in that region, but it's not really a big driver for this ambitious target that they've set. They've said that a lot of that is going to come from other regions like Southeast Asia. They're saying that Europe and the US are a part of their reach and where they want to be getting revenue from, but they're not attributing this big growth path to come in large part from that region. But for context, I mean, 150 million users in the United States of a population that's anywhere between 350 to 400 million. That's a significant size of that population that they are able to, or that currently are TikTok users that they wouldn't want to lose, regardless of whether or not they're able to extract more revenue out of them. But yes, a lot of the revenue drivers they're saying are going to come from other regions, and they're continuing with this expansionary plan for their e-commerce service and hoping it will rival the likes of the Amazons, as I mentioned earlier.
Okay, Jimmy Moyaha is an independent market analyst. Thank you very much for your time this afternoon.